Okay, my name is Denis Wood, and the company's name's KGL, and we've both got a long history. And the site's Jervois, and Jervois has got a long history. In fact, Jervois started being explored back in 1926. Even MIM have been shareholder in Jervois for quite some time. And our target is to get a 10-year mine life at 2% copper, which was our target when I joined the company as executive chairman in 2016. And we've recently, at the end of last year, put out a feasibility study which confirms that we do have an 11-year mine life at 2% grade.
Brilliant. Well, it's lovely to meet you, and it's the first time we've spoken or heard this story. So I'm sort of keen to maybe get a bit of backdrop and context for what you're trying to do, and obviously we'll go through some of the numbers around the feasibility study. So can you give us a bit about you? What's your background? What have you done that's kind of relevant to what we're about to talk about?
I've got a very long background. I go back to joining BHP in 1969 as a trainee metallurgist, and after I finished my metallurgy, I took over the Minerals Division's coal evaluation exploration department and did a geology degree. And then since leaving, I've fundamentally been headhunted into other jobs. I've cleaned up quite a few public mining companies, and I've built a couple of mines from scratch. In fact, the ones I built from scratch, I was a major shareholder of at the start of the process. So I've actually completed construction of a couple of mines. I've worked internationally. I had a job in America for 3 years as president of a large engineering consulting company, which had 50 laboratories over the States, plus some in South America and South Africa. So I've got a huge amount of very successful experience. I had retired 7 years ago, and I'd been retired for about 8 months, and I got pulled into Jervois, into KGL, by the major shareholders because it had gone broke. It had put out a pre-feasibility study, and there was all sorts of issues there. And fundamentally, it was a 6.1-year mine life at 1% grade copper. And given we're in the middle of Australia, that wasn't going to work. So my goal in joining it, and I underwrote the rights issue to get it started. So I've been 10% shareholder ever since. So for the last 7 years, every time we've done a capital raising, I've been contributing. And I think we've achieved a fair bit in that 7 years. The fact of the matter is we've gone from 1% to 2% copper. We've gone from 6 years to 11 years. We've got a lot of potential, by the way, to keep going, which is one of our goals now, and keep expanding. But I also, while I was bringing that into line, we've got all our government licenses, approvals done. I've got the mining lease. I've got the ILUA, which is the traditional owners agreement that you need. I've got the EIS and the mine management plan. So the mine management plan was signed off by the minister, which fundamentally gives us the green light to go. So all those regulations and requirements that are needed are done. The resource is done to enough. The feasibility study's done. And so now it's really a matter of making that bankable, raising the money and constructing. But of course, in the current climate, and this is couple of the public mining companies that I got headhunted to clean up. The reason they were in trouble is the construction process got held up. And of course, you can't survive if you've got a 12-month or a 2-year construction period. You need to do it. The thing you've got to focus on is getting it done in that time, because all the other costs will blow you out of the water. So what I'm working on now is focused on is how I do that and get it done in the right time according to the current budget process in the feasibility.
That's an interesting turnaround there. I mean, was there a sort of management shake-up when you came in and try and, so you got to bring the people the right sort of skill sets and attitude. So did you bring people with you? I mean, how did it all work?
No. In fact, whilst it's been 7 years, when I first took over, the company was broke. Absolutely. And it would have had to shut down if I hadn't have done what I did. They couldn't raise any money. I had been on the board for about 3 months, but I took over as chairman and underwrote it. And the fact is we come down to, I think, 3 staff and 100% board change. So the board did change completely. And I got rid of pretty well everybody because we couldn't afford to keep them. I was down to 3. So for the next 18 months, I was really doing all the groundwork, which included starting the licenses, controlling the drilling. We really had there was a resource, an open cut resource at Rockface, but it really isn't a resource. And I started what looked to be the most promising potential at Rockface. And over the next period of time, we proved that up to be a resource of some quality. Of course, Rockface's grade is 3, around about 3%. So we got Rockface up to a reasonable deposit, which then allowed the grade to increase. We did get rid of a lot of the lower grade material that was in the other resource. And we got all the licenses and everything. Now, of course, I didn't do that without bringing in some expertise. And my expertise is in fact, because of my history, is being able to locate those people and find them. And to be frank, one of the big issues with it, I'm not a public company fan. The ones I've cleaned up have been public companies. And I did play a big role in getting MacArthur Coal public, but once it became public, I got out. But I did help and I did get it there. But unfortunately, this is a public company. I was bought in by the major shareholders, which I'm obviously one now. And the fact is they're terribly supportive. There's a huge amount of knowledge base within those shareholders. So in fact, I do get a fair bit of advice and assistance from within the current shareholder system to some extent.
I'm intrigued by that. But, you know, it's a great turnaround story, and obviously they were cash constrained, but they're also, as you say, sitting at 1% in the middle of Australia. That's going to be marginal at best, right? So you've gone from 1% to 2%. So how do you go about doing that? What do you focus on? What did you have to do when you first walked in? What did you say? Right, the challenge is the following. Here's what we're going to do about it. I mean, I'd love to hear that.
Okay, it's really quite simple. I've run into this all my life. Whilst I'm a geologist, I don't have dreams when I walk onto the site. We decided back in January 2016 that we were going to focus on the copper. Now, it's a highly mineralised deposit. In fact, there's been a lead zinc mine there. There's tungsten there. There's molybdenum there. You know, we're even finding cobalt in our rejects. So, and when you walk around the structure, the vertical structure that sticks out of the ground and is in shape like a big J because it's been dragged around by the fault beside us. You can notice the copper on the surface pretty well the whole 10-kilometre walk. So it's highly mineralised. So the trick was, and still is, and that's why I did retire when I turned 70, August before last. I did get brought back 8 months later. And almost the same thing had happened again. So the fact is, you've got to focus on the deposit. So once we established we had Reward Underground, Rockface Underground and Bellbird, that's what I've been drilling. We're focused on the downhole EM. Geophysics has worked very well for us, particularly at Rockface. We've followed that. We've focused on the copper. We've focused on the resource, and we've built that up. I got rid of some of there was Cox's Fine and Rockface open cuts. They were 0.8 grades. I just crossed them off the resource list. So I dropped the low grade material and focused on the potential. And I'm back in again now, and that's what we'll be doing this year. My target now is to go from 11 years of mine life to 15 over the next 6 months.
Well, I mean, you say low grade. I think most people in Chile would be delighted with 0.8. So how much money did you have to raise to actually allow you to kind of go through this process?
You mean to go forward and construct it?
Yeah, to go. Well, as in. So I'm still focused on what has gone on in the past, because I'm sort of intrigued by the way that management teams think and the way that they behave, because it gives me a sort of sense of what they're going to be capable of going forward. So, you know, again, this period that you went through, where you said, look, we're going to focus on this higher grade mineralization. We're going to ignore the 0.8% stuff. I mean, it must have cost you a bit of money, and it must have been pretty expensive money at that, given where you were back then.
Well, to some extent it was. But as I said, we've got a very, very supportive shareholder base.
And who are they? Give me a sense of who they are. You know.
Well, you've got the Salem Group in Indonesia as our major shareholder. I'm the second shareholder. There's a Swiss minerals trading company that's the third. There's a Swiss banker that's sort of a manager of people's investments. He's been there now. They've been there the whole time, because KGL used to be Kentor Gold, and it went broke on other assets. I mean, initially it was in Kyrgyzstan and then at West Australia Gold. So when I joined it, they'd all cleaned out, but the shareholders had still stuck in there and were still supportive. So when I got the board left and most of the staff left, the next 2 years we didn't spend much money at all. The fact is, we drill a couple of holes, run the downhole EM. We were very fortunate that drilling wasn't a big demand at that time, which meant they could leave the drill rig on site while we got the downhole EM done. So it was really quite slow, but the drilling is expensive because the deposit's fairly vertical. And as a consequence, you've got to hit it from an angle, fair angle, to actually get a reasonable estimate of the thickness. And, with rock face, for instance, we're now down to 1 kilometre, and you're drilling it from quite a distance out. And to comply with our JORC system that we've got to comply to get the reserve done, they're almost got to be 50 metres apart, all the holes. So actually, and it's a 1.7 billion year old deposit. Not the deposit, but the structure. And as a consequence, drilling is very difficult. So the drilling's expensive. And for the first 18 months, we had one rig working probably quarter of the year, off and on, until we actually proved up we had a resource at Rockface with a reasonable grade. And then obviously we're able to raise more money to get it up to the level where we could say it's indicated on the JORC reserve. We also expanded very much the reward underground that had been part of the first part of the process. And we've done a lot of infill drilling on the open cut potentials. But fundamentally, you're right, but it's been most of the capital that we've raised has been done by rights issues. As I said, I'm against, I don't think exploration companies should be public, to be frank. There's massive risk with exploration companies. It doesn't matter. Everything can go well, but you might not still get your license, or you might get a protest, or all sorts of things can happen, and still could happen to us. However, the deposit's there, it's real, it's copper that's going to be needed. We've got all our licenses. I've not gone public with anything too much apart from what we have to do. This is my first interview public-wise, because I'm very conservative. I didn't go out and promote the company until we got more and more solid. And I'm now going to start that process, because depending on how I go getting confidence that we'll get it constructed in time, in the budget time, then obviously I'll be starting to raise capital very shortly. Now, I do have a massive success. I raised even the capital going forward that we've done so far. Most 90% of it I've raised myself by just raising it, and I'll do the same with the capital that we require for the construction. Now, we look like it's about 400 million to get going. That's not just the construction. That's to get us to where we're making a profit.
It is fascinating. So there's a few things I want to get into with you. Obviously, I agree with you on the public component as well, which I've just bought a copper mine myself, and it's staying private because. But generally, I think it's very hard for retail investors to actually understand what it is that they're investing into, and there are many risks involved with exploration. Well understood, but people get excited about the leverage component. But here we are. We are talking about a public company today. You're talking about extending the life of mine, which is great. You can do that in lots of ways. I'm kind of interested in scale here. So you haven't got a lot of tonnage, but you have got grade, and you've got a few byproducts as well. So in terms of what the feasibility study tells you, or should tell us, what should we be looking at, and what can we expect in terms of how you go forward in terms of increasing the size of the project, not just the length of period by which you mine?
As in increase the daily production?
And increase the daily production, or quite frankly, the tonnage. You're sitting at what, sort of 23 million tons, that sort of level on Jervois Resource, is that right?
That's the resource, yes. Almost 24 million tons at 2%.
Right, and so what does, in as far as global copper deposits are concerned, what does a meaningful resource for a copper project globally?
Okay, well, the target initially, which I put a lot of work into, mainly through the shareholder base that would want me to come and take it over, was 10 years at 30,000 tonnes of copper a year. And we're not quite, we were 30, but this last model is, well, you've got the extra material that we're bringing in with the mining process that's diluted it a bit. So we're down to about 25 to 27,000 tonnes. So one of my goals is to get it back up to 30. My license and stuff, I've still got some flexibility in them with respect to how we can still grow a lot more. But given the apparent copper price increase about 2025 being out the roof, then there's a good reason why between now and then expanding the target or expanding the resource is well worthwhile. And one of the reasons that I'm making that I have made it now one of our priorities. And in fact, I'm looking at getting to 15 million years in the next 6 months, 15 years in the next 6 months. The reason I'm doing that is I believe I can do it. I can believe it can be done, the indications are that the types of deposits that we got on site, there's going to be more of them. What we do not know is what happens as we keep going deeper, both Reward and Rockface, for instance. We've got no idea. Rockface would indicating so far that it's probably still going. So, if we can pay for 2 rigs or 3 rigs for 12 months and expand the deposit over the next 12 months, it's going to add real value to the project, assuming what's predicted to happen with the copper price.
Right. Well, obviously, copper price hit $4 yesterday. That's kind of good news, and the general, I think the general consensus is that it should go higher. The commitments that governments are making on our behalf, and how much copper they're talking about, it seems incredulous that we're actually going to be able to find the copper that we need. So the high-grade projects, much sought after. We're talking about, how do we scale your project up in terms of life of mine, but also in terms of the amount of pounds you're going to be able to get out of the ground. But I'm sort of intrigued about the numbers. So what coming back to the question about feasibility studies, what did the feasibility numbers look like? You're going down one kilometer. It's open at depth. It's fairly vertical. It gets expensive when you start going that far underground. So how do you manage your ability to make the margins that you want to make?
Oh well, the numbers will show how that happens. We're obviously, we've got to mine it, and when you talk about Reward, we are talking about a higher grade. And yeah, the underground mining process is reasonably expensive compared to, obviously very expensive compared to the open cut. And that's why we're currently looking at expanding. One of the potentials is the copper price goes up, the open cuts can expand. But we're going to do the Bellbird open cut first, which means the decline into Rockface will come from that bottom of that open cut. And it'll be the same into Reward to some extent, into the Marshall area. The decline for that will come from the underground from the open cut, from the bottom of the open cut once it's built. So we're obviously optimizing everything as we speak. And that will continue even after you start operating. For anybody to think you can rule it all off and optimize it perfectly before you start, they're going to miss the point. The fact is that's not how it happens. And to add some another context in here, we will be mining as part of the process that we're established now, and it's not in the fees, it's not part of the process, but we will be mining lead zinc ore as well. Now we've my predecessors that I took over from, they were mining lead zinc at the same time. Now our process plant can do lead zinc as well, but there's a modification to be made to it. It's about $30 million, $25, $30 million. But we've seen the potential when I come in 2016 in copper. So we've ignored the potential of everything else at this stage, except obviously the silver and gold, which is part of the copper resource. And to be frank, one of our biggest advantages is that, particularly starting up this operation, so we now can manipulate the startup process. We've got more flexibility because we're just trucking the ore to Mount Isa, as opposed to trying to build up 10,000 tonnes at either Darwin or Adelaide. So what we do now, our daily production rate can be controlled by the cheapest cost for our process, given that we're just trucking the material to Mount Isa.
Right, and if I look at the feasibility, what I was trying to get at is sort of understanding of the numbers. How much of this is predicated on future copper price, to determine your success today. So the NPV of about 240 million Aussie at an NPV 8, an IRR 21%, and sort of payback within a sort of 4.5 year period. So is that where you want to be, or do you think there's more that you've got to do to kind of improve those numbers? Because in terms of NPV 8, it's not a big project yet. So how do you get it there?
Well, I've started some private mines myself, and admittedly they're coal. So there's Copperbella and Morvale. Copperbella that was the first one I started. And it started off very small. And here, 27 years later, it's still going, and it's still very profitable. Size is not necessarily the answer. And if you take the Chilean mines into account, I don't believe the real operational numbers are out at the moment. Their numbers are going to go up like hugely. You're right, the grade, but most of those old big mines there are getting bigger and bigger. They're open cuts, and they're getting bigger and bigger and bigger. And of course, they've got a massive water cost because they've got desalinators down on the ocean. They've got to pump it up a couple of kilometres plus a couple of 100 kilometres into the mines. We're very fortunate. The big basin beside us is loaded with water. So, we've got water just next door, right next door to just west of our deposit. So we've got a lot of advantages, but we're also in Australia, which, whilst getting our licenses and everything is more difficult, I believe, it takes longer time, we've got ours done. So we're ready to go. And whilst you could argue the feasibility study is not that solid, I believe it's solid enough to justify going. But if copper price does go to where people are saying, it's a huge change to the number. And I can tell you, going from 11 years, well, I should say 10, but it's 11, to 15 makes a very big difference, because as you pointed out, the decline, for instance, for rockface, it's pretty well a fixed cost. And if we can add another 5 years to rockface, for instance, that's sort of almost doubling the life of rockface and doubling the amount coming out. And quite frankly, it's only the addition to going down from the decline that adds to any cost.
It's kind of the numbers I quoted earlier. Obviously, were at, I think, using your numbers at $4.23. You also give an example of what it looks like at $5.90, which is takes the NPV8 up to $700 million and IRR 40%. But if everyone operated that way, life would look great. I'm also slightly intrigued by. I think copper went on run at the beginning of 2022, and then it kind of came off a little bit. And all copper companies, kind of their charts reflect that. What are your expectations for this year for your company, because you can't rely on copper price to do all the heavy lifting, you're going to need to raise some capital. Can you give us a sense of what that could look like, the timing, and so again the application of that money?
I only raise enough money to do what I'm telling the shareholders I'm going to do. Now, I'm a fairly regular capital raiser, but I always define what I'm going to do. And there's 9 out of 10 people that are shareholders will tell you I always do it. Now, the big issue going forward, now we've got the expansion to the mine, to the resource, which I know we can do, and it's not a massive capital cost. But then you've got, we're in the middle now. I'm starting to drafting up the final contracts and stuff for mining and processing. And because we're not a mining company, I know how to handle this, and we use tier 1 miners, we'll use tier 1 processors, the construction. We don't cut corners. And the trick is when you're building something like this without an income, which we don't have, the trick is you've got to get it right. You know, the big companies do struggle when they build projects now, and I know that because I've had to help clean some up, because the staff don't necessarily focus on getting it right. And it's getting it right.
Well, so what do you mean by that? That's intriguing. Tell me more about that. What do you mean by that? When people you expect people to go to work and try and get things right every day, but when you say they don't focus on trying to get it right, what are they doing? What are the mistakes they make?
You look at the amount of cost to people from delays in the construction process. I mean, it's terrible. I mean, it's horrendous. Even our major shareholder, who's building a mine in the Hunter Valley, and his construction on his process plant, when I come in to give him a bit of a hand, was 18 months behind schedule. But, you know, he's been paying Tees the mine for that 18 months. Been take or pay on the rail. I mean, it's getting it right means focusing on the time and get the time right. And you know, that's what I got to convince myself now before I do anything else, is that what I'm putting in place can do that. And I am working on various things at the moment that could make it happen.
See, that's interesting to me. The question I always ask, you know, my staff is like, what would you do if it was your money? At risk is the bit in brackets. But would you? And that's interesting. So, you know, okay. I know a lot of projects last year, you know, they certainly, when they were sort of moving between the economic studies, you know, costs went up, but you blame that on inflation. But you're saying sort of large part of this is perhaps people not really focused on the right things. Is that what you're saying?
Yeah, to some extent, yes. But very much to the extent that I'm telling you that, I mean, I even had to clean a coal mine up in the Hunter Valley, a public one that the Commonwealth Bank and Bain and Company brought me in to clean up. It had gone public and gone broke in 9 months. And quite frankly, it was just a matter of cleaning everything up to match the time, which is what I do. And it's fundamentally, when you start construction, focus on the time. And if that means you've got to bring a dozer in to get something to happen to keep it on time, that's what it means. And that'll cost you less than delaying the project, because particularly in our case, we're in the middle of Australia with a campsite. So flying people in and out, getting them there, and having them held up because something's not being done. So that's the process I'm focusing on now. I've always focused on that process, and I know what happens if you get it wrong. But it's more difficult today to get it right, and we're working on it. I'm working on more module design type work and having it constructed off-site and brought to site. I'm looking at things that are quite possible. I own 23% of Sedgman's, a construction company, a design construction process company, for about 6 years. So I'm well aware of the story from both sides and what is necessary for it to happen.
Okay. When people say time is money, you mean it.
Well, time is money when you're doing it. And I'm responsible for a lot of the shareholders in here. And in fact, because this is my first public company that I've actually taken from scratch, unfortunately for me, I had my doctors, my dentists, my brothers, my sisters, my nieces and nephews. They're all in there.
No pressure at Christmas then.
And of course.
Right. I want to talk to you about one of the other aspects of this, which is obviously your offtake agreement with Glencore. Tell me about that, because obviously when you get something like that in place, it sounds great. It kind of gets people, well, makes people think, well, if those guys have done some due diligence on you and signed something, it must be good. So that will have helped the stock price. So when was that done, and what are the actual terms that you agreed with Glencore on the offtake?
It's obviously confidential, but I can tell you it's a big advantage. The flexibility in it and a few other issues are big advantages to us. The disadvantage for me at this point in time, and it's not anything critical for how we're going to go forward, because if I can get myself convinced that we're going to do it on time, which I will do eventually, and hopefully it won't take too long, then I will be able to raise the money. It's not because the major shareholders will have to commit to the equity, some of the equity or a fair amount of equity, then they will do it. So I'm not losing sleep. However, if I don't go to Glencore, I had two parts of the market wanting the copper that would have funded the project.
No, I get that. But look, but about 100% offtake of the copper concentrate is a big commitment. You kind of gone all in on that one. Was that done out of desperation? You thought, well, that made the most sense because you've got a very strong view about what the future copper price looks like. So I guess you're very confident about the debt and the equity, but going forward, if you hadn't have got Glencore, so what problem did it solve for you?
Oh well, fundamentally, it's reduced my mining costs a lot because, as I said, we do have some quality issues. Nothing serious, but we do have some, and they're mostly associated with the open cuts, the more shallow ore. Now, what we had to do if we're going to go to export is start the undergrounds up to blend it with the open cuts. But now we can keep the cost down the first couple of years by not starting the undergrounds while we're working on the open cuts. So there's a lot of things like that. But the big one is we've only got to truck it. If we go to Mount Isa or Alice Springs, we've got to truck it one or the other. There's not much difference in the trucking time. On the big issue when you're talking to the government and people like this and the public is your carbon footprint. So, if Mount Isa's got to import copper ore, they're going to have a fair carbon footprint on it to get it there because Mount Isa is getting lower and lower on copper. Whereas, here we are, we can truck it there or truck it. And then if you go to Alice Springs, we've then got to put it on the rail and take it to Darwin or Alice Springs. There's more carbon footprint. Then you've got to put it in a ship, take it to China or wherever it's going. There's another carbon footprint. So one of my arguments here is the carbon footprint, but more is the flexibility of how we can mine and the flexibility of our mining rate. Because it becomes a real issue, and this is one of the issues because we're a small mine, is meeting the ship requirements. Now, obviously, if we go to Adelaide, we can blend it with others. So it's not as bad as going to Darwin. But the flexibility and the cost going to Mount Isa is a great positive reflection on our numbers in our feasibility study.
Interesting. But as you kind of scale up, that problem goes away, and hopefully the grade continues as well. Can you give some? I know it's a private confidential agreement with Glencore, but did that involve some kind of money up front? You talk about because you talk about time as money, but the cost of money is money too. So again, did that help you at the time to overcome a hurdle or a hump?
No, there's been no money involved. The only money involved in the contract between us and Glencore is when they buy the copper ore off us.
Okay, fine. So it's an option. And is that, are you fixed on that? Is that a binding contract, or is that just sort of an option?
No, it's a binding contract, but it's got a deadline in it, which we're okay with at the moment. But it's only a deadline that will cause some re-discussions.
Renegotiation of terms should you not meet them. Okay, fine. But have you got any opt-outs yourself? Should the markets improve significantly?
Well, the cost of the copper ore is based on the market.
Okay, So it's just like Glencore has a reputation of being very, very strong and good negotiators because they usually negotiate from a position of strength, whereas the company is, tend to be in a certain position when they're negotiating. So, okay, well, look, more of that another time. I think Dennis, that's a kind of really good sense of how you think and how you've got to where you are and the challenges ahead of you. So some money to be raised to allow you to deliver what you will talk about with shareholders and to the market. I would say this, that I'm looking at a PowerPoint presentation from April 2022, and it was hard to find as well. In terms of the way that you're not a public markets guy, but do you think going forward you're going to, change that somewhat? Are you going to be communicating more regularly to the market, or are you going to leave that to others?
Oh, no. You'll find as I get ready to raise finance, and we're starting that process now, no way I would let the process start, although it did start after I retired. I've canned it now until you've got a financial model you can put a case up for and put some and actually argue your point. But what I've got to do now before I take the next stage is get positive again, and that is to have the signed contracts. And what I do with the contracts for mining and processing, construction and stuff, I sign the contract subject to us getting the finance. That means those tier one operators I've got will back me with the financing process. Because as I said, as was the case with Copperbella and Morvale, we're not a mining company, not yet. And it'll take years. If we went and raised our own mine engineers and metallurgists and everything you need now, it's still not a team that's worked together before. I may be able to get one out of Oz Minerals or something now. Who knows? I might be able to pull a full team out for a team that's worked together, but it's not part of life. And so I will be using tier ones. The part that will be raising the money on will be the contracts. That's the addition to our feasibility to make it bankable. And that's what we're working on now.
Brilliant. Well, look, Dennis, I'll wrap it up there. Really enjoyed listening to you and some of your experience, the stories of your experience in the past, of what's worked and what hasn't. Always enjoy learning. So, like, stay in touch with us. Let us know how you get on and how you move forward. I mean, we do need copper. I think the demand fundamentals are there for all to see. So, good luck with this.
Thanks, Matthew. It's been. As I said, this is my first attempt at talking to the market, or talking to the greater market, so to speak, not the one that's a shareholder, because all of a sudden now, with the feasibility study out, the need for copper is becoming extremely public, and it is real, and the potential for us to expand our copper regime is where we make the real value, and expanding the project is, I think, and so do the major shareholders, think the most positive thing we can do, along with getting the construction process financed and underway. But as I said, it's not going to happen unless the project construction, until I'm convinced I can manage it and get it done on time. And it's possible. You just got to get it right. Thank you.